Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining us for this segment, we have Simeon Hyman, Global Investment Strategist with ProShares, to discuss turning rising interest rates into an investing opportunity for equities. Simeon, it's great to see you as always. Welcome back to Trade Talks.
Thanks for having me.
You got it. Tell us about ProShares ETF, ticker EQRR. What is this fund all about?
So the name really says it all. ProShares Equities for rising rates, and it's an ETF that can turn interest rates into an investing opportunity for equities. You know, most people hear rising interest rates and they immediately think they have to run over to their bond portfolio and play some sort of defense, which certainly may be true. But there's actually an opportunity to reposition your equity portfolio to actually be a little bit more offensive and take advantage of some of the sectors and stocks that may do better in a rising rate environment.
And what does that mean for investors?
So EQRR strategy follows the Nasdaq US Large Cap Equities for Rising Rate Index, and it does indeed focus on the sectors that have had the highest correlation with rising rates, and then it goes one step further and focuses on the stocks within those sectors that have had the highest correlation to rising rates. And the proof has been in the performance. Since that all-time low of treasury yields in the summer of 2020, that was about 50 basis points on the 10-year, and we're closing in on 2% now. The EQRR index has actually outperformed the S&P to the tune of about double, returning about 88% through mid-January versus 44% for the S&P 500.
So how does EQRR strategy work then?
It looks at those sectors that have the highest correlation historically with rising treasury yields. And it's not a timid strategy. So as an example, right now, if you look at the index, it's actually about 80% financials, energy, and materials. And those are the sectors that you see in those headlines that typically do well in rising rate environments. Financials, the steepening yield curve, fatter interest rate margins, and of course, energy, we know what's happening there, and materials as well. Beneficiaries of those rising prices that are typically coincident with rising interest rates.
Which sectors tend to perform well in rising rates environment?
So it's those financials, energy, materials. You also have industrials. And remember that the sector is kind of belt and suspenders because it does go in and look at the individual stocks within those sectors to make sure that you're focusing on the stocks within them that also have shown the highest correlation.
And where does EQRR fit in an investor's portfolio?
It's a large cap equity strategy. As I mentioned, it's not timid. These are big sector tilt. So it's really it can be a very effective satellite to a core large cap allocation to try to take a little bit of an offensive stance when those interest rates are rising.
And finally, Simeon, where can investors go for more information on EQRR?
Always ProShares.com.
All right, Simeon, great to see you as always. Thanks for joining us on Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.